Hi, everyone. Welcome to this fireside chat we have with Carl Jiang from FalconX, who leads market making there. We also have a couple of his team members joining us here. We're here to share the best practices of FalconX and how they're helping startups or people working on early stage projects and how they can help with tokenization, liquidity, and just be a helpful partner with any Zoogla startups. As a lot of you may know already, FalconX was founded by one ex-Googler and also one non-ex-Googler, Raghu, is the current CEO and co-founder of FalconX. We've hosted many events in their offices and these fireside chats as well to help the Zoogla community. We were able to meet Raghu via one of the Zoogla events back in 2018, and we've been able to be partnering with them on different initiatives since then. So without further ado, I'm going to get Carl to introduce himself and perhaps his team members, and I'm going to do a casual fireside chat, but any members who are joining us live, feel free to also chime in your questions via chat or just unmute yourself and ask those questions. So Carl, over to you for a quick intro, please.
Chris, thank you so much, and thank you for having us on today. Super excited to be here. Very quickly, for my background, I come from traditional finance. Was at JP Morgan, and then went to a quantitative hedge fund that spun out of Susquehanna. Was doing equity derivatives market making there, so a lot of volatility-based strategies, dispersion, ARB, relative value. Stayed at that particular fund for about 12 years, and then ultimately left in 2017 when vol trading became really slow and commoditized, and a lot of exciting things were happening in crypto. Made the switch over, have been at a few startups working on different market making strategies and trading products before ultimately joining FalconX about a year ago to lead the liquidity services and market making business here. And a few members of my team are on as well, and I'll give them a chance to introduce themselves.
Hey, Matt, if you just unmute, that'll be fantastic.
Just do it off the line, sure.
Got it. Hey, everyone. Matt Round here. I've been at FalconX for about 6 months. I've been primarily focused on running ventures as well as helping Carl on the market making side. Prior to FalconX, traditional finance background, was doing private equity at TPG.
And I'll follow up, Matt. Hey, everybody. Regan, nice to meet you, and thanks for having us. I've been at FalconX for coming on for 4 months now. Prior to FalconX, I was in the venture landscape at a firm called Top Tier Capital Partners, based out of San Francisco. Led, some of their first investments in the crypto world, and then decided to jump head first into a company that's actually building something in the space when I joined FalconX.
Awesome, thank you. Whether it's Aaron or other folks that have joined out here live, are there specific questions you want to make sure we get out of the way and they can answer them for you, or should we just go on with our first few questions that were submitted?
I'm good. In general, just learning and interested in the liquidity crypto space, so thank you.
Awesome. Thank you, Aaron.
Awesome.
So, Carl, why don't we just start really with how FalconX works with early stage projects? Because I know you work with a lot of hedge funds, large companies, but how have you really worked with early stage projects and also startups?
Chris, yeah, absolutely. Happy to answer that. Wanted to keep this fairly casual. So basically, I can give a quick overview of how this side of the business works. Essentially, the goal for me is to leverage the entire FalconX platform in order to provide liquidity solutions to projects that are issuing tokens, so that at whatever various stage that they're in, ultimately we want to be a partner and a net value add, right? So the way that we think about that is we divide our liquidity solutions into sort of 3 major categories that roughly lines up with the timeline of a project that's launching a token. So if you think of that as the pre-launch phase, the launch phase, and the post-launch phase as the 3 categories, we have liquidity solutions in each of those. So taking the first piece, the pre-launch phase, the liquidity solution we provide there is capital introduction and investment banking, right? So one of the biggest benefits with working with FalconX is we have 500 plus of the largest institutional investors onboarded and active on our platform. These would be your traditional venture funds that have crossed over into crypto, crypto native VC funds, liquid token funds, asset managers, family offices, etc. So if as a project founder, if you are looking to do a fundraise and looking for additional investors or funding, as well as specifically to bring on a strategic investor that potentially provides value beyond just capital, we can be super helpful with those types of introductions. On the investment banking side, we've actually worked with projects to manage their full rounds, where we've actually brought in the investors through our network, brought in the funds, managed the lockup and the vesting schedules of the tokens, and managed the distribution of those tokens post-lock. So a lot of the things that you may see in kind of traditional investment banking will do for the token side. So that's category one in the pre-launch phase. Category two, at the launch phase, the primary liquidity solution we offer there is market making, right? So the reason that there is a need for market making in the crypto space is because of the fact that exchanges are so fragmented, right? And if you look at sort of the traditional IPO market, if you list in the US, you really only have two choices where you can list, right? NYSE or NASDAQ. And in those places, all of the major market makers are sort of members there, and they'll assign you a market maker. Whereas in crypto, there's over 4,000 exchanges, right? Even the more liquid ones, there's 20 plus very liquid exchanges and 100 plus less liquid ones, right? So for a project that's listing, they need to find and bring their own market maker to the exchange in order to have that guaranteed day one liquidity. Now, why is market making important, right? That day one liquidity is essentially what is needed for your stakeholders, retail traders, institutional investors to have the ability to very fluidly enter and exit your ecosystem. So the way that we approach market making, the question would be, how are we different, right, than some of the other incumbent market makers in the space? The market makers that's been around since that 2017 era, the GSRs, Wintermutes, and Jumps of the world, all primarily started off as a prop shop model, right? What that means is their initial business model was to raise capital from LPs and then to try to generate alpha on that capital. What that looked like in the early phases was doing market making on the very liquid pairs like BTC and ETH, and essentially trying to generate profits and returns on doing market making and trading on those. They very quickly realized that you could apply that same type of technology stack to do market making as a service for projects. But if you kind of think about what are the types of strategies that work within the prop market making sphere, and then compare that to the needs of a project, which I alluded to earlier, is all about reducing friction and creating a fluid environment, there's a disconnect, right? Because the types of strategies that work in prop market making is directional bets, is monetizing the volume itself, right? So all of that alpha, all of those returns are driven actually by friction, right? That alpha from trading volume is because of the fact that there's differences in spread across different exchanges. And so there's sort of a built-in incentive for a market maker that's focused on a prop strategy to keep things kind of fragmented and having friction. So in that sense, there's a clear disconnect between the incentives around launching a token versus the incentives around doing prop market making. So we saw a major gap there. And for FalconX, we are not a prop shop. We are not a hedge fund or a high frequency trading firm. For us, we are a venture-backed startup that is trying to be the first true prime broker in the space. So we took that same kind of client-centric approach that we take to all of our other business line and applied it to market making. And the way that we did that essentially is to do market making as a service versus prop market making. Now, what does that look like? It's essentially about providing deep liquidity in the order books around tight spreads, right? So for us, it's not really about monetizing the volume or trying to generate P&L around it. If you look at our volume distribution, we're at 98% passive, meaning the amount of volume that's transacted on maker quotes, which are adding liquidity to the order book, versus 2% active, which is what's taking away liquidity. If you look at kind of traditional prop market making models, it's usually at a 50-50 distribution between passive and active volume. So there's a fair amount of volume that's actually taking away rather than adding liquidity in a prop model. So that's kind of the primary difference and approach in market making. It's subtle, And it's kind of a nuance, right? For someone that's not from a trading background, but ultimately it can have a lot of impact on the future growth of the token in terms of the alignment of incentives there. So that's the category 2 on the launch phase. And then finally, category 3, which is post-launch, the liquidity solution that we offer there is treasury management, right? So once you launch your token as a project, you'll have a treasury that's going to be a mix of both a concentrated position in your own token, as well as if you raise capital from venture, some mix of stable coins or maybe other crypto assets. We can help with liquidating the concentrated position into funds needed for OpEx through the use of our OTC desk, which is one of the largest in the space, or through our whiteglove algo product, which essentially looks at the venues that you're trading on and figures out how much you can sell in a passive way so that you get the liquidity that you need without having a severe negative impact on the token price, right? For both of these services, we also offer to early investors as well in the project, so that if your early investors are unlocking and looking for liquidity, we want to be the one to help them so that they're not just going on to exchanges and selling aggressively and kind of cratering the token price. Once you're out of the token and you're in some mix of either stable coins or other assets, we can help with rebalancing the treasury portfolio, as well as potentially help in generating yield on your treasury, right? So generating yield could be something as simple as working with our credit team and doing borrowing and lending on stable coins, or it could be something about a lot more exotic in which we can work with our structured products team to figure out if there's something that we can do on the derivative side of the business to do something that maximizes yield, but in a way that mitigates risk so that it's market neutral. I know that was a ton of information. I'll pause there. Happy to answer any questions on the liquidity side. We also offer a lot of services in terms of consultation and advisory that I can get into after, but I want to give a chance to anyone that has any questions specific to the liquidity solutions that we provide.
Sure. Any Zooglers want to ask specific questions on liquidity? And also, I think Regan's going to show us a slide. In the meantime, Carl, I know you mentioned that FalconX is a startup. For those who aren't familiar with FalconX, can you please give some further background on how big FalconX is? Is it a small startup? So
yeah,
give some background.
Yeah, absolutely. So we just recently closed our Series D round with post-money valuation at 8 billion. So when we started off to be kind of the first crypto prime broker, the initial focus was on best execution. What that looked like was best execution in spot, right? So basically, if you're an institutional client and you're looking for the best place to buy and sell BTC, you came to FalconX to kind of for that price discovery. And then very quickly we launched futures, and recently we launched options as well. We are the first CFTC approved swap dealer in the US for amongst any crypto company. And then on top of that best execution layer, we also built a credit layer. What that looked like was delayed execution, margin trading, as well as borrowing and lending with our credit team. And then on top of that, we have a settlement layer. So that's sort of the kind of the core business and platform for FalconX. And it's what enables my side of the business to essentially leverage that fully to help projects that are launching and creating a token.
Great. So you're fairly large, not a small startup right now.
Yeah, I guess at this point, yeah.
Sure. So given this is August 17th, when we're doing this live, some people have been watching this on a recorded video, but talk about the state of the market today, really. Where liquidity has evaporated? How do you guys still help projects? And what's your guidance to people who work on these projects to navigate these market conditions? Because I know people on this call or people who are listening to this are probably thinking, should I wait to launch my project in the future? How do I get support? Can you actually share more about what guidance would you give startups today?
Yeah, no, absolutely. I certainly can do that. And as I alluded to earlier, in addition to kind of the liquidity services we provide, we also provide a lot of advisory services that are part of the engagement at no additional cost to the project. And some of those advisory services include tokenomics consulting. for projects that are very early and thinking through the design of their token. We help them think through how to allocate percentages to specific stakeholders, as well as kind of designing the incentive structures needed to incentivize the types of behaviors that the projects are looking for. And then more specific to your question, another area that we advise projects on is exchange listing advisory, right? So very specific to what you just asked about. As projects are thinking through, when should I be launching? How should I be launching? What is the approach I should be taking at launch, right? So we advise on sort of that entire cycle. I would say that in a bull market environment, in kind of the late 2020 through mid to late 2021, when we had a fairly strong bull market in alt tokens, the formula for a lot of projects in that launch equation was to get onto a DEX as quickly as possible to kind of show that traction in growth of volume and growth of community. And then once they sort of had the average daily volume and the growth of the market cap that they could point to, they then went to centralized exchanges to get listed at larger centralized exchanges. That was kind of the stepstone formula for a bull market environment. In a bear market environment, it's completely flipped. Because of the fact that volume is down across the board, listing on a DEX does not necessarily guarantee volume, right? It's not a kind of raging bull environment where as soon as a token is live, the retail interest is there and there's trading, right? So that kind of initial idea of listing on a DEX and going to centralized exchanges is completely 180 now. Because of the fact that exchanges at this point, their volumes are down across the board as well. So there's a high amount of pressure to find the next interesting project that they can bring onto their platform that's going to induce organic users and organic volume, right? So they're constantly scouring and looking for the projects that are going to bring that to their platform. So what I tell projects these days is if you're a super strong project with a very differentiated project, with a very differentiated product, with a strong team, strong investors, and strong kind of social engagement metrics, Twitter followers, Discord, etc., go to the exchanges first, go to centralized exchanges first and tell that narrative. Because before you launch, all of those items are things that you have control over, right? How you tell your story, how you show your product differentiation, how you have narrative around your team and your investors and your kind of social metrics. All of those things are ones that you have control over. And in that phase, you have essentially optionality, right? You can go to the project and tell them and create that interest of giving them that narrative of the types of users and types of volume that you're going to bring to their platform. If you were to launch on a DEX first in this environment, if that launch does not go well, that essentially gives them another data point about you on your average trading volume and your market cap. And that all feeds into a formula. And all of those formulas weight to a score, right? So if your market cap and your volume is missing, they have to weigh those other factors, team, product, investors, social proof, much higher. And it's much more likely that you're going to get an exchange listing set and you can always add DEX later, right? So it's a completely different formula in launching in a bear market versus launching in a bull market. So yeah, I don't know if that answers your question, but that's how we have communicated to our clients in the way that they should think about this type of environment and how they should sequence their launch.
That makes sense. Mike, did you have pop up for a specific question or should I continue?
Oh, no, sorry. I just had to turn off my video for a second. Let's turn it back on.
All good, all good. So I
Okay.
want to make the chance to ask you a question. Just on the slide that we saw, Carl, clearly branding and messaging and marketing is really important. How do you really help with those pieces? I know you did mention a little bit, but it does seem that it's even more important these days to get your branding and marketing in place before you reach out to anyone external, isn't it?
Yeah, absolutely, absolutely. So on the sort of the marketing and branding piece, right? So a lot of what we do is help with projects on their product marketing and branding to the institutional community. So what that means is once we work with a project and they have major product announcements as well as PR coming up in their roadmap, we start to include that into our client newsletters that are going out to our institutional community. as well as some of our larger clients get very regular weekly or bi-weekly syncs with their relationship managers to kind of discuss the state of the market and what's interesting and what's happening, right? So in those cases, there's bullet points that we will filter down to our relationship managers to start talking about the projects that we're working with, right? So it's a very good way for a project to start to build organic awareness in the institutional community so that the next time they are coming to a raise or doing a sale out of their treasury, it becomes a much easier lift because they're already sort of on the radars of the folks that they may be reaching out to, because we've kind of organically weaved that messaging in to our own PR and marketing. And then on the branding side, our product, our marketing team and our product market team is happy to kind of look at and give feedback on, assets, websites, investor decks, all those things, because we've seen a lot of projects launch and kind of go through this process. So we can give a lot of feedback on what resonates well with the institutional community and if they're targeting correctly, right? If they're looking for something a bit more engaged, for example, to really bring on a marketing firm or a consultant to help them build out their social engagement and social metrics, there's consultants and firms that we've worked with that we've had good experiences with some of our projects that we can make those introductions to and help them get connected so that they can kind of build out that function if that's a piece that's lacking and missing in their toolbox.
That's awesome. And you did touch a little bit about this, but I want to make sure we double click on it. How do the good projects differentiate themselves before even coming to you? What should they have prepared? What should they really have put together already? Can you share more of some best practices there?
Yeah, absolutely. So I would say that the projects that do really well, the first and foremost, they have to really understand what their value is that they're bringing, right? And be able to really communicate their brand value to both their community as well as to investors. And I think the ones that do that really well, it's reflected in very strong investors, very strong cap table. And by the time that we start talking to them, they likely have already been talking to very strong investors, right? And it's about basically being able to communicate what that product differentiation is and what it is that they're adding in terms of value to this space versus someone that's just trying to, create something that's a clone of the last thing that worked, right? And I think that's one of the biggest factors that we've seen between a project that does really well in terms of launch and the ones that kind of flop is the fact that the ones that really understand what their own brand value is, brand identity is, and then be able to communicate that in a very clear way to their community and to their investors. Ultimately, they're the ones that do the best in getting listed and then having very successful launches.
It's awesome. Some of these Zooglers that we've started to work with are trying to create different NFT projects. They're creating a lot of DeFi projects. Can you share more about how you help with NFT liquidity as well?
Yeah, so this is an area that we're sort of exploring, right? We haven't exactly dived fully into it, but I think this is definitely an area that we're exploring in terms of potentially providing liquidity for NFTs as well, right? Because NFT markets are even more fragmented than token markets, and ultimately, FalconX, we want to be the liquidity provider across all assets. So this is definitely an area that we're experimenting with in terms of providing market making for NFT projects, potentially helping with closing the spreads on floor prices for projects that want to kind of have more active liquidity, active trading around their floor. Because I think even now the types of spreads around floor prices in NFTs is much greater than any of the spreads that you see in even the most kind of tail alt tokens. But this is something TBD, right? This is something that we're definitely exploring, but we haven't fully rolled out a product yet.
No, sounds like it'll be exciting times next few months to see the products that you have coming out from there. Yeah. And during the introductions, you also mentioned that you also invest. So how do you invest, and do you also invest in projects that you make markets for?
Yeah, absolutely. I'm happy to turn this over to actually my colleague Matt, who's on the call, who is the one who leads a lot of our venture efforts and due diligence. So Matt, you want to take that question?
Yeah, absolutely. I can mute as well. Sorry about that. Yeah, so happy to touch. Again, sorry about that. Happy to touch on kind of how we're thinking about FalconX Ventures. So we really are still kind of in the early innings of launching our venture arm. We launched it back in February. There were a few legacy investments that we made prior to February from some, C-suite executives, but primarily I've started investing since February. We've made about 10 investments so far, and our check sizes are a little bit on the smaller side. So they've ranged from about 50 to 200K. And we really see ourselves as a strategic investor. And the main area that we look for a strategic synergy has really been market making. But there are other areas that we look for, such as kind of our OTC desks, structured products, treasury management, where we try to find other synergies. But primarily it has been market making. So we do try to find that link sometimes when we are making investments. And happy to touch on kind of different sectors that we're looking at. But for the most part, really kind of see ourselves as a strategic long-term value add partner versus kind of a pure investment fund.
Awesome. We'll get different Zoogla projects to reach out to you, I'm sure. Why don't we go to some audience questions? I know one has been submitted by Mantas. Mantas, you know, unmute and ask your question.
Sure, yeah. Sorry for not having my camera on. I'm a bit on the go, but just curious to learn a bit more on how projects approach treasury management these days, especially around risk management. I guess in a bull market, like a treasury just goes up, but in the bear market, suddenly you have to consider many more things. So that's one side of a question, and obviously, I guess part of that risk management also involves diversifying away from your own tokens, which is, well, I mean, your product at the end of the day. So just curious, how do projects think about that, and whether there is an appetite to sell your own tokens and have that probably more healthy treasury versus just doubling down what you do. Yeah, so just curious to understand, what's happening in that space and how projects approach that, and especially in the bear market. Hope that makes sense.
Yeah, it's a great question. I think you made a good point on the fact that in a bull market, it's much easier to do treasury management, right? Like to produce enough OpEx to fund operations as well as growth. It's very easy if the token is continuously going up. It's both from sourcing the trades through OTC or through whiteglove. It's pretty easy. From the perspective of projects in a bear market environment, they're still doing it, right? Because ultimately, they need to fund operations and to fund kind of the growth of the ecosystem. I think one of the things that projects now consider from the perspective of trying to get as much runway out of their treasury as possible is they start to really focus on exactly what's needed to get them to that next milestone, right? Whereas before it's a lot easier, right? They're kind of thinking like, okay, I can always sell X amount every month if I need to, etc. So now it's much more about like, what is the minimum amount needed? And if they've done a raise and they're trying to figure out what is the best way to reduce their burn, and if they have idle assets, they try to then maximize those idle assets through yield generation, whether that's borrowing and lending on stable coins or through some sort of structured products. And then it's essentially, trying to plan for a rainy day, right? So they still are selling, but it's a lot more difficult because of the fact that they need to be much more nimble. And so our whiteglove algo product is generally the one that is much more used in this type of environment because they need to kind of do it regularly at a regular cadence versus more strategic kind of big OTC deals that happen more commonly in a bull market.
Yeah, that makes sense. Would you mind telling us a bit more about you mentioned algo whiteglove product, right? Was that the name? Just curious to understand what that is and how that works.
Yeah, absolutely. So the way that whiteglove algo product works is essentially it's a way for and not just projects, it's actually a lot of our institutional clients use this product as well. But it is essentially for buying and selling of tokens in a programmatic way. And essentially for the project side, the way that it works is they're looking to get liquidity over a specific time horizon in a passive way. Like, for example, a project may come to me and say like, hey, I need, 1 million of notional USD by the end of Q4 in order to do some sort of, initiative, project, payroll, OpEx, etc. Right? So I would then look at the venues that they're listed on, figure out where they're trading, figure out the average daily volume that they're trading at, and then try to sell in a passive way. If you sort of look at the average daily volume, usually the bar for remaining completely passive versus starting to have a price impact is 2% of average daily volume. If you're selling at below 2% of average daily volume, for the most part, you can be completely passive and not have much of an effect on the price itself. If you start to extend above 2%, it's the amount that you're over really starts to affect how much you affect the price of the token, right? Then it becomes a conversation of timing and time horizon. If they have a long time horizon and can do it gradually over time, I always recommend that projects stay below that 2% threshold. If there's an immediate need for the liquidity, then we can kind of weigh what that looks like in terms of the size of the amount that's being sold on a daily basis to get them that liquidity. So it's that balance. And then once we have that, we can essentially set the parameters, a specific floor price. The floor price could be keyed into the VWAP price of the token. So it's kind of actively adjusting. And then over time, it gets you the liquidity that the founder or the project team is looking for based on the parameters that they've set, essentially their aggression and their minimum price levels.
That makes sense. Very cool project. Thanks for giving us an overview.
Absolutely. Thanks for the questions.
Thank you, Mantas. Carl, before we actually go through perhaps other questions, I do want to make sure you get to address the other side of the equation of investors, right? Because we do have a lot of people in the Zoogla community who are high net worth individuals, people who work in investment firms, people who work at companies that may consider working with FalconX and thinking about accessing perhaps these projects and becoming investors. Can you share more about how can these folks potentially be partners with FalconX to participate in these token launches and liquidity opportunities?
Yeah, absolutely. So a lot of what as I mentioned earlier, kind of the major ask on the project side at the pre-launch phase is a lot of capital introduction, right? So they're usually at a point where they're either doing their seed round or their private sales. And so getting connected to investors and to funds is a huge priority for these projects, in their pre-launch phase. So to the extent that there are, Zoogla community members that are investors, as well as ones that work at funds, I'm happy to include, anyone in our pipeline and in our deal sharing, so that when we do get an interesting project that we're working with that's going through a private sale or a seed round raise, that we can actively kind of distribute that information out to the Zoogla community for anyone that's interested in getting connected with the project and potentially participating on that front.
That's awesome. And how often do you share these deals? Every week? Is it only when deal by deal, or?
Yeah, it's usually on a deal by deal basis. We've, especially in this environment now, given the fact that we are there's softness in the market, the projects are trying to extend their runway and kind of delaying launches and trying to time the market better. So we're getting a lot more deal flow on the kind of the private seed round phase of folks looking to do additional token round sales or kind of strategic rounds. So yeah, that's been happening a lot more, but we do distribute that information on a deal by deal basis.
No, agree. Still a lot of activity, but sort of under the radar activity.
Right.
Yeah, great. For those who haven't had a chance to ask questions, Mike, Catherine, Aaron, Landon, anyone else? Omkar, Yuan? So what are the main questions that people normally ask you, Carl, when you're talking to a early stage project or startup?
Yeah. So I would say that generally once we've are in kind of conversation with projects, at that point they've already kind of understood why they need market making. So it isn't so much like a pure education type of conversation in terms of like, what they need to do. But I think a lot of the questions is very similar to what you have alluded to. So a lot of questions around kind of current market environment, a lot of questions around like how they should be thinking about timing, a lot of questions around sequencing, whether they go to DEXs first, centralized exchanges. If they go to centralized exchanges first, should they add DEXs? When do they add DEXs? What is the best time to start doing OTC deals out of their treasury? What is the best time to kind of set up white glove algo out of their treasury? Thinking through structuring the rounds as well, right? Like, should they be doing an equity round? Should they be doing an equity round with token warrants? Should they be doing an outright token round, etc.? So a lot of those types of conversations. And then obviously tokenomics is huge, right? Like projects, especially early stage projects, want to really understand how they should think about tokenomics, how they should design the incentives, what are the best practices around distribution of percentages across stakeholders. So yeah, I would say that that would be kind of the most common sets of questions that we get.
And we usually see a lot of Zooglers, or even current Googlers, who are coming up with projects and try to think about these launches or designing them. How early do you actually want to meet these Zoogler projects? Is it super early? Is it up to a certain stage and where they have certain things set, or how should they reach out, and at what stage should they be reaching out?
Yeah, no, great question. We love engaging super early. I think like I said, we essentially want to be a partner the entire way through. So we've definitely engaged with projects that are 6 to 9 months out from launching a token, where they basically are creating a product and know that they eventually want to launch a token, but have no idea about tokenomics or the design or where they want to launch or any of those things, right? So we're happy to engage at that phase. So we're fairly agnostic as far as stage. So early stage to even ones that are already launched or already trading.
And do you care where these projects are based? Asia, Europe, America, or?
We don't care where the teams are based. Our operations are 24/7 and global, so we will have coverage anywhere that the project teams are based.
That's awesome. And in terms of the length of duration of analysis and working with the project owners before you accept them, is it usually a quick turnaround time? Would you tell them a couple of days, a couple of weeks? Just how really, if someone wants to work with FalconX, how long should they expect this time frame?
Yeah, that's a great question. Turnaround time is fairly quick. Our team can move pretty fast. So in terms of like doing due diligence on our side, that typically takes about a week or so before we're ready to kind of make a decision on engagement. And then once we do engage, there's obviously processes that we need to take on our side in terms of KYC and all of those things. KYC typically, if the docs are all in order, only takes 48 hours on our side. And then from that point, it's another couple of days for onboarding. So all in all, if there's no holdup in terms of like missing docs, we could from having the initial conversation with the project to getting them onboarded and fully engaged, it could be as short as 2 weeks.
That's great. And is there a form people should be filling out? Is there an email correspondence, or what's the best way of engagement there?
Yeah, great question. So yeah, definitely available by email. I'm also on Telegram. Pretty much whatever is easiest for folks to get in touch. I'm available.
Great. So here's a question from Landon. Landon, do you want to unmute, or should I ask a question on your behalf?
Yeah, happy to unmute. I was just curious if y'all had a link like on your website for more information about some of the advisory services that you mentioned.
I believe we're in the process of updating some of our website info. I don't think the information that Regan shared earlier is on the website just yet, but we can certainly send through the deck that we were referencing as material for anyone on the call that would be interested in checking it out.
Sounds good. Thank you.
Awesome.
And Carl, I know you're always looking for new projects to potentially partner with, but are there certain times of the year that you actually want to see them more versus other times? Like if someone's trying to figure out, a lot of Zooglers do ask me, well, I'm not ready yet, right? I mean, these introductions, whether it's you or other folks at a certain point in time, do you want to, I know you mentioned you want to see people early, but they may not be ready to share more or speak with you, but is it certain times of year that's better than others?
Yeah, that's a good question. That's an interesting question. I've actually never been asked that, but I don't think I have any kind of preference in terms of seasonality around around projects. I would say that maybe in terms of just for the kind of the project's benefit in terms of like launching, there's probably seasonality just around very much like crypto has started to become very much in sync with seasonality of like TradFi, because I think a lot of TradFi folks have moved into crypto. So, summers tend to be a lot slower. So like launching in kind of in the August slow months, it isn't always the best for projects. And, obviously like holiday season. But I mean, for me, I don't have any issues around seasonality, but just for kind of the benefit of, project teams, I think there is a bit of like seasonality now in crypto that kind of syncs up the way that traditional finance seasonality worked.
Great. Sounds like any time of the year, just let me make sure of that. Have a few weeks buffer for the holidays coming up. And then also, well, we're now in August, so next August, be aware of that. That's all. Yeah,
absolutely.
Can you actually walk us through an example of a project you worked with? I think there'll be more meaty in terms of you may not need to talk about the client or the particular project, but I think walking through an example would be really helpful for the community to actually understand how does it actually work.
Yeah. That's a great question. So without going into kind of the specific clients, but one of our clients that we worked with, we helped with the launch. It was a layer 1 project. So we helped with their initial launch and listing on exchanges. And then once they so it sort of kind of step 1, right? We helped with kind of doing the initial, some of the cap intro when they were first raising. And then when they did their public sale and launch, we supported them on CoinList, Coinbase, and some of the other exchanges that they eventually listed on. And then we managed the treasury management for them. This particular project, the initial engagement for us was for a 12-month engagement where they essentially leveraged multiple facets of that engagement, from cap intro to market making to treasury management. At the end of that 1-year engagement, at the time, we were engaged as one of 2 market makers because of the kind of the positive experience that they had with us. Ultimately, they decided to renew the engagement with us and came back for another extension of the engagement for 24 more months, and ultimately decided not to re-engage with their other market maker. And so now we actually support their market making across all of the exchanges that they're on, right? So 6 exchanges now instead of the kind of the initial 2 to 3 that we first worked with. But yeah, that was sort of the process, right? So we engaged first, helped with making intros on doing their capital raise, helped with their launch in the public sale, and then listing on the specific exchanges, supported market making across the exchanges throughout that entire term, and then helped with treasury management once they had a live and liquid token. and then ultimately renew the engagement to continue all of those services.
And from day one to when you actually help with the listing date itself, how many months or weeks were that? Can you remember?
Yeah, it's a good question. So in this particular case, they went live with, they were already, fairly close to launching, and it was kind of a different environment where it was a bit more of a bull market environment. So from the initial engagement to listing, it was only about a month and a half. I would say that more recently, some of the projects that we work with now, we've actually extended our engagement from the standard 12 months to the 18 months timeframe now, sometimes 24, because to budget for the projects that we're engaging with very early that are needing help on the tokenomics side before they're even ready to do kind of the capital introduction piece. And then also to just the overall market environment. So that there has been a shift from that kind of 12 months timeframe where there was that initial 1.5 to 2 month buildup period before we started doing market making, to now an 18 months engagement where there's sort of a 6 months buildup period before we start to actually do market making live for the project.
Super helpful. I think that gives people more of a better understanding of the timeline there. You had mentioned tokenomics. I know Landon mentioned tokenomics. I know something everyone always asks about tokenomics design. Can you share best practices people really do have in terms of what do they read, how do they design, how do they get feedback, how should people really think about tokenomics design, and how do you guys do it as well as you partner with projects to help them with that?
Yeah, that's a great question. So in terms of best practices, right? Like without getting into like, just super into the weeds, just kind of high level in terms of thinking about how to allocate to specific stakeholders. Ultimately, what you need to think about in terms of tokenomic design is the fact that it's different, because I think a lot of founders come from the tech and the startup world, right? So they kind of think about tokenomic design very similarly to the way that they may think about raising equity or cap table from a startup equity world. But the one major thing that you need to keep in mind for a project that's launching a token and then doing token sales and doing tokenomic design is that there's no dilution effect, right? So for someone that's doing a startup and bringing on kind of initial investors, angel, seed, series A, series B, etc., it's much less important in terms of deciding exactly the percentage allocation to all the stakeholders, because there's dilution effect over rounds. But with token design, you have a fixed amount of tokens. So the amount that you allocate to your early investors, that never gets diluted. So even though for a lot of projects, there is a temptation to offer early investors huge amounts of tokens in percentage-wise in the early seed and private sale rounds, it could have a negative effect on the project later on. Because of the fact that those early investors never get diluted, they're going to have a huge chunk of the tokens at the best, most favorable prices if they're given a huge allocation. And at the same time, those are also investors that are most in the money and have the most incentive to sell when you enter a public liquidity event on a listing on an exchange. So the ones where we see pitfalls are projects that really try to aggressively bring in like a huge name, early angel, seed investor, fund, VC, etc., allocate too much to them, right, in those early rounds, give away too much of their tokens at a very favorable valuation. And then it ends up where as soon as they lift and as soon as they vest, those investors start to dump very aggressively on the token, and it kind of craters the price. So that's one pitfall. Second pitfall is, I think this is a lot less common, but this is definitely a more common mistake in kind of the 2017 ICO era, was projects allocated too much to the team, right? Obviously everyone wants like a huge amount of equity, but it's a very bad signaling effect to the community if you have a huge amount allocated to the team, and especially if they pair that with a very short vesting period, because it kind of tells the community that the founders and the team is not in it for the long haul. So that's a very bad signaling effect. The third piece is the size that is allocated to either community engagement or treasury, right? So for most projects that have very long-term viability in the space, the amount that they're allocating to their treasury, which essentially what they'll use for inducing kind of growth for the project over time and inducing rewards, and to kind of try to ride through, bear market periods to induce more engagement, is usually at a minimum, I would say 40%. Most projects that are really strong and kind of more like long-term focus are usually at a 55 to 60% allocated to treasury and community engagement, right? So for projects that are only allocating like say 30%, it's a very weak signal to their community that they're not basically budgeting for future incentivization to their community and to their stakeholders. So those I would say are probably the three most common mistakes in the way that folks think about tokenomic design and how to allocate to specific stakeholders.
No, great best practices there. And you mentioned in terms of lockup periods, is there a good lockup period in terms of you've seen the best projects have, or what would you recommend there?
Yeah, I mean, this is always a bit of a loaded question, because I would say that in kind of the bull market period, where it was definitely more, projects had a lot more leverage in negotiating with investors and their folks that are coming in. The goal is always to try to extend out the lockup period, right, for the project, because ultimately you want to try to induce as much long-term alignment as possible, right? But I think in the bear market environment, a lot of those lockup periods have shortened, right? So whereas in the bull market periods, we were seeing like, 2 to 3 year locks, that has a lot of times shortened to 1.5 years. Sometimes even projects that are very, very in need of capital and willing to give up a lot of incentives to investors are even willing to do like, 6 months, 3 months locks, which are, just not really very negligible, right? So I would say it's a bit of a negotiation practice, right? But for the project, it's always better to optimize for a longer lock. And then the way that you unlock is also very important. So I think there sort of started to be a trend where a lot of investors were pushing for daily unlocks, right? Where the tokens were unlocking daily and they were accumulating daily. From a community perspective, retail holders and kind of project communities absolutely despise daily unlocks, right? So because of the fact that daily unlocks are super hard to plan for, it's very, very difficult to plan for the selling pressure of daily unlocks. If you kind of think of it as like, everyone kind of has a different threshold for when they want to sell a token, for when they want to lock in profits. If you have 3 investors that are all daily unlocking, one investor may want to sell on a weekly basis. One investor may want to accumulate for about a month before they sell, and one investor may want to sell every day, right? As a market maker, that's very difficult for us to plan, because we don't know sort of what the cadence of that selling pressure is going to come in. Whereas if you're unlocking on a monthly or quarterly basis, it's very easy to understand the amount that is coming into the market. And potentially we can even engage with your investors earlier to try to help them either hedge out or get liquidity through methods that may not impact the token price, such as OTC or whiteglove algo products. And it's much easier to kind of plan around for that versus daily unlock. It's just kind of a free for all. And then ultimately, if the price of the token starts to, slide, then the community starts to point to the fact that, oh, it's because it's daily unlock, investors are constantly selling. And then it just becomes like a cycle of negative feedback.
Super helpful. I think you gave a lot of tips to both investors and project founders as well. So thank you for that, Carl. Any final words? We're about to wrap things up. So anything else you guys want to mention to the community and how they should reach out, or things we didn't cover that's super useful for them to think about?
Yeah, no, I think I would have just closed with the fact that, ultimately, we see it as a privilege to be able to work with, founders and builders in the community and folks in the Zooglar community. So would love to get connected if anyone is, building something out there, even if you're super early and you just want to bounce ideas, our team is available to kind of talk through what you're seeing, what you're thinking through, and we can certainly give feedback on the product, on what we have seen, and yeah, just happy to engage, and we're here to help. And ultimately, it's about growing the ecosystem and growing adoption for Web3 and for crypto.
Great. Unless there's final questions from the community, I think it's a wrap, folks. Anyone wants to unmute to ask their final words or questions? You can see everyone thanking the speakers on chat. So thanks everyone for joining today. Also thanking our speakers here.
Thanks a ton. This was really informative. Definitely, I've been kind of reading on the website too, listening to you, and I definitely have a lot to think about and talk with my co-founder and all that. So much appreciated.
Absolutely. Thanks, Mike.
And thank you for our three speakers for sharing all your emails on chat as well here. So I think we'll have a wrap. Kyle, thank you so much for representing FalconX and speaking to the Zoogla community here. I know a lot of folks will reach out directly as well. Appreciate you sharing the best practices, whether if you're a token project founder or even as an investor. I think we all learned a lot today, and I'm sure we'll see each other next time. Thanks for all your support of the Zoogla community, FalconX.
Absolutely. Thank you so much, Chris, for having us. Thank you for everyone that participated and was here to hear us talk about, what we are super passionate and excited about.
Thank you, everyone. Thanks for joining, everyone. See you at the next Zoogla event. Bye.
Have a good one.